Good morning, everybody, and welcome to our daily Facebook Live update. It's a bit of a gloomy, depressing-looking day outside from where I'm sitting, but hopefully we'll be able to provide some clarity to business owners and employees this morning to brighten your day a little bit. So, my name's Bron Pearson. I'm from Pinnacle People Solutions, and we provide human resource services and advice and solutions to regionally based small to medium enterprises and not-for-profit organisations. We are here to help you and your business through what are very challenging COVID-19 times. We are clocking up 2 weeks today since we started these live streams at 9:15 every weekday. With updates on new information and more detailed information about topics relating to staffing and business management. And of course, today we're doing a deep dive into the JobKeeper Legislation, which was approved through Parliament yesterday evening. Good morning to Jess and to Naomi. Thank you, everybody, for joining this morning. Again, as always, please ask any questions you have as we go along. And I will do my best to answer them. Outside of this, obviously, you can contact myself and my amazing team anytime via Facebook, email or telephone, and I'm sure we're going to have details come up in the comments shortly from my wonderful team to let you know how you can reach us. So today we're going to take a deep dive into the government's new legislation package that was passed yesterday evening. Particularly focused on financial support for businesses related to staffing. It may be that I foreshadowed this at yesterday's live stream, but it may be that this session takes a little longer than half an hour, and we're prepared for that. And so there's a lot to get through, and we don't want to miss anything, and we obviously want to be as responsive as possible. I would say, and I'm going to say this at different times throughout this morning's live stream, there is a lot of detail to digest in terms of these programs, and we would encourage you with your particular business and your particular circumstances to get in touch with us, have a conversation, and let's work out what is going to be the most appropriate strategy and the most appropriate actions for you and your staff as your in terms of your business. So there are before I forget to, this live stream will also be available on our YouTube channel and also on LinkedIn. So we're making sure to get it out on platforms that are not just Facebook. And thank you, team. They've just put up our contact details for you. So please feel free to share this information. It'll go straight up onto our page as soon as we finished. It's live streaming through our Facebook page today. It will go up on those other channels also. Feel free to share and send the information to anyone who you think would benefit from being with us today. Okay, so there are two main things on offer for businesses in terms of financial support during the COVID-19 pandemic. The first is boosting cash flow for business, which is effectively the refund of PAYG withholdings to eligible businesses, resulting in a minimum of $20,000 but up to $100,000 reimbursement from the ATO, and the JobKeeper scheme, which is payroll support, essentially an employment subsidy, from the government to eligible businesses in the amount of $1,500 per eligible employee per fortnight before tax. So we're going to have a look at the practical aspects of both of these and what you would need to do to benefit as an employee or an employer. So in terms of boosting cash flow to businesses, and as I said, feel free to ask any questions as we go along. I'm watching the chat screen at the moment to see what comes up. So first of all, boosting cash flow to businesses. In terms of eligibility, you need to have had an ABN on the 12th of March this year that continues to be active. You need to have an aggregated turnover under $50 million based on the 2018-2019 financial year. You had to have made payments that you are required to withhold of salary, wages, directors' fees, compensation, certain retirement or termination payments, and or voluntary withholding from payments to contractors, even if the amount you had to withhold was zero. And you either lodged your 18-19 tax return by the 12th of March or lodged relevant activity statement sales in a tax period of that year. So what you need to do in respect of the boosting cash flow to business is lodge your activity statements as usual with the ATO, and the tax office will do the rest, essentially. Credits and refunds will flow from the 28th of April, so it's going to be another month before, or not another month, it's going to be about another 3 weeks before we see that income. For the March and June quarters, if you lodge quarterly, and for March, April, May and June, if you lodge monthly. If you don't usually need to lodge an activity statement, but otherwise you feel you meet the eligibility criteria, the ATO is currently working on a solution for you. So stay in touch with your accountant. And we will also talk about this more towards the end of April as details are finalised. So in terms of boosting cash flow to business, that's our understanding of that. Of course, all of these live streams are subject to our disclaimer, so please be mindful of that. Particularly in this instance, we are not financial experts. We are getting our heads around what's required, and would strongly advise you to talk to your accountant or bookkeeper with any more specific questions in respect of the boosting cash flow to businesses. So on to JobKeeper. So we've done a couple of sessions on this, announced on the 30th of March as information has come to hand. We now have legislation, and we will provide you with a link to the bill for those who are interested in wading through the details of the legislation as it's been passed, or those who might have insomnia and this might be useful. Anyway, we're going to put that up for you in just a moment. So eligibility for JobKeeper. Businesses and self-employed individuals are eligible to apply for JobKeeper if your turnover has fallen by at least 30% when your turnover is usually under $1 billion, or 50% if your turnover is more than $1 billion. Now, when figuring out the fall in turnover, you should compare the same time last year, to this year, unless that time period is not representative of usual turnover. And there will be flexibility on the part of the tax commissioner to receive information from of different source and information from business owners in order to make a judgment about that. Turnover is calculated in the same way as it is for GST purposes, and reporting on business activity statements. So it won't be unfamiliar to you, or certainly not to your accounting supports. So what do you need to do and when? If you haven't already, please register your interest with the ATO so they can contact you once formal applications open. I think there's been, at last count, over 750,000 businesses in Australia who have registered with the ATO since the announcement was made about this program on the 30th of March. Even if you're not entirely sure whether you're going to be eligible, get up there and register, because then you'll get the information and you'll be able to progress it. So talk to your accountant, bookkeeper, financial advisor about whether your business will meet the eligibility requirements, as you will need to supply supporting documentation. So it doesn't hurt to be ahead of that curve at this point in time, and getting your eligibility documentation in order. So here's what you can do in terms of JobKeeper regarding stood down or terminated employees. So as long as an employee was on your books as at the 1st of March this year, if you've terminated their employment, you can ask them if they'd like to be re-employed. maybe on the same contract or maybe on a different contract. You don't have to offer this to terminated staff, and they don't have to agree to come back. So this would have to be something that you wanted to offer, and it would have to be something that terminated staff were to agree to. You can rehire staff and then immediately stand them down, so you're only paying them the JobKeeper allowance. Make sure, however, that if you are rehiring staff and changing their employment conditions, hours of work, pay rate, etc., that the contract still complies with relevant awards, enterprise agreements, minimum wage, and the National Employment Standards. And I'm going to take you through the changes to the Fair Work Act, the temporary changes that have come in to enable JobKeeper in a moment. So that will give you a bit more information about what you can do and the employees, what you can expect that your employer might do in terms of the JobKeeper program. So the JobKeeper scheme also allows eligible employees to give reasonable direction to employees not currently stood down or on leave to change their hours, their duties, and or their location of work to ensure that their employment can continue. So as I said, I'm going to get into that in greater detail in a moment, but there have been changes to the Fair Work Act to enable employers to give those reasonable directions. There are conditions guaranteeing minimum payments and hourly rates of pay, and you have to consult with your employees prior to giving any direction. So again, call us, talk us through your situation in your business, and we will give you quite specific advice relative to what we understand the requirements to be about how to implement this in your business. Employees will continue to accrue entitlements and service as if the direction has not been given. Very important. So how your employees continue to accrue their entitlements does not change. So you might want to, if you think you might need to do this with your staff, please contact us. We're always here to help. And our contact information is in the comments. It's still essential that any changes to work that you make are made lawfully, as the Fair Work Commission will not accept we had to move fast due to COVID-19 as a valid excuse if there's a problem. And there are pretty hefty penalties for businesses that are found to have done the wrong thing. So this is no different to any other, making sure that as an employer that you meet your obligations to staff in respect of any aspect of your obligations under employment law. There's just a whole lot of new changes for a temporary period that you need to get across. So we can help you with that. It's our job to know that stuff inside out. So please give us a call. Please ask any questions if you have a question, because the other thing to remember about all of this is the odds on other people would like to know the same thing. We've had a whole lot of questions already asked, which we're gonna go through in a moment. But please add any questions that you have to the comments space this morning, and we will answer those. Okay, so here are what the changes are to the Fair Work Act and what employers can do as a consequence of the, and assuming they're eligible for the JobKeeper scheme. So the new laws override, because they've been made to the Fair Work Act, they override any modern award, enterprise agreement or employment contract. So let me say that again. The new laws that have come into place, or the changes that have been made to the Fair Work Act, override any modern award, enterprise agreement or employment contract. Now, the new laws mean that an employer can stand down an employee without pay, either completely or partially, for any period that they cannot be usefully employed. And they can change employment arrangements such as what they do, where they work, and when they work for a specific employee. So, and thank you, my team are putting up frequently asked questions, fact sheets, and a whole range of things around what I'm talking about this morning so that you've got access to those. So essentially then, what is the JobKeeper wage subsidy? So it's a $1,500 fortnightly payment to subsidise the wages of eligible employees. So you must, as I've mentioned before, be able to demonstrate a revenue reduction of 30% to access the subsidy, or that goes up to 50% if your turnover is of $1 billion or more. You are able to register with the ATO, and you should do that as soon as possible, even if you're not entirely sure whether you might be eligible at this point. So what are the new, and the $1,500 a fortnight JobKeeper wage subsidy is also before tax, so you must take tax out of that. So it's $1,500 a fortnight, less tax in terms of what you provide your staff. So what are the new stand down provisions? So the new stand down provisions allow an employer to give a direction called a this is called a JobKeeper enabling stand down direction to an employee to not work on a day or days in which they would normally work for a lesser period than the period which the employee would ordinarily work on a particular day or days, and work a reduced number of hours compared with the employee's ordinary hours of work, and not be paid for the period that work is not performed. Now, an employer can do this provided that when the direction is given, the employer qualified for the JobKeeper scheme. So be very careful, employers, not to be doing this until you are clear that you are qualified for the JobKeeper scheme. For the period of the stand down, the employee cannot usefully be employed for the employee's normal days or hours because of changes to business attributable to the COVID pandemic or government initiatives to slow the transmission of COVID-19. The implementation of the stand down direction is also needs to be safe, and specifically safe having regard to the nature and spread of COVID-19. The employer becomes entitled to one or more JobKeeper payments for the employee for the period that the JobKeeper direction applies. You've also got to have the wage condition satisfied, which I'll talk a little bit more about in a moment. You need to have a minimum payment guarantee, which is the $1,500, and the hourly rate of pay guarantee also needs to be met, and I'll explain that a little bit further. So one of the questions that comes up is, how do I know an employee cannot be usefully employed? So this situation arises when an employee has no or a reduced level of useful work available to perform because of the COVID-19 pandemic or because of the public health orders and directions, however described in each state and territory, of course, imposing restrictions on individuals and businesses. Useful work does not have to be the work that the employee ordinarily performs, but it does need to be genuine productive work that provides a net benefit to the employer. You should be able to demonstrate that the impacts of the virus or the government's measures to deal with it have caused the fact that there is none or less useful work available. So what is the wage condition? I mentioned that before. That's one of the things that has to be met. It means that the employer essentially has to qualify for the JobKeeper scheme, is entitled to receive JobKeeper payments for an employee and otherwise complies with the coronavirus economic response package. Compliance will involve rules that are yet to be announced by the government through the ATO, so we will keep you briefed on that. What is the minimum payment guarantee? So if a JobKeeper payment is payable to an employer for an employee per fortnight, the employer must ensure that the total amount, that $1,500 less tax, is payable to the employee in respect of the fortnight, and that it is not less than the greater of the following: the amount of JobKeeper payable, or the amounts payable to the employee in relation to the performance of work during the fortnight. Amounts payable includes the following that might be paid in respect of a fortnight. So that includes incentive-based payments and bonuses, loadings, monetary allowances, overtime or penalty rates, and leave payments. So what is then the hourly rate of pay guarantee? So if a stand down in direction is given by you as the employer to an employee, you must ensure that the hourly base rate of pay is not less than the rate that usually applies to the employee, as if the direction hadn't been given, okay? If you've directed the employee to perform different duties to normal, then you must ensure that the employee's hourly base rate of pay is not less than would have been applicable had you not given the direction, and the hourly base rate of pay that is applicable to the duties that the person is performing. So what is the hourly base rate? The hourly base rate is the rate of pay payable for your employee's ordinary hours of work without additional allowances, loadings, or penalties added. If the employee is not paid hourly, the hourly base rate of pay will generally be determined by the provisions of any applicable industrial instrument, so a modern award or an enterprise agreement. Where no industrial instrument applies, dividing the payment made in each pay cycle by the number of ordinary hours in the period. Again, that's minus allowances, loadings, or penalties added. We would really encourage you to get further advice regarding this issue where you've got unique payment arrangements with a varying number of hours in each pay cycle, for example. And obviously, we would really encourage you to talk to us about your particular work environment and the staff that you have and the duties they're doing, whether they're covered by modern awards, whether you've got an enterprise agreement. There are so many things that need to be considered to make sure that you get this right. So please give us a call and talk to us. When does a stand-down direction not apply? Okay, so a stand-down direction does not apply to the employee during a period when they are taking paid or unpaid leave that is authorised by you as the employer, or they're otherwise authorised to be absent from their employment with you. So what are the workforce flexibilities that you as an employer can use by direction? So given these changes to the Fair Work Act legislation, there are two scenarios to understand. Firstly, directing an employee to perform different duties to normal. You can give this JobKeeper direction, provided that the duties are within your staff member's skill and competence. When the JobKeeper direction is given, you qualified for the JobKeeper scheme, so please don't be doing it until you know categorically that you qualified. The duties are to be performed are generally safe and specifically safe having regard to the nature and spread of COVID-19, so you can't not continue to abide by your health and safety obligations as an employer. The employee holds the necessary license or qualifications required to perform the duties that you're asking them to do. They're reasonable within the scope of the employer's business operations, and the employer you will become entitled to one or more JobKeeper payments for the employee during the period that the direction applies. So secondly, you can direct an employee to perform duties at a place different to their normal workplace, including their home. So this is a direction for somebody to work away from the normal place of work. You can give this JobKeeper direction, provided that the place is suitable for the employee to undertake the duties you're asking them to do. That when the JobKeeper direction is given, the employer qualified for the JobKeeper scheme. So again, don't be preempting that at this point in time. The performance of the duties are safe and specifically safe in regard to nature and spread of COVID-19. The performance of the duties at the place you've nominated is reasonable within the scope of the employer's business operation, and the employer becomes entitled to one or more JobKeeper payments for the relevant employee during the period that JobKeeper applies. So the test that requires that any of these directions can only apply if you as the employer have information before them that leads you to reasonably believe that the JobKeeper direction is necessary to maintain the employment of the employee. So there are three elements to this level of the test of whether giving a JobKeeper direction is reasonable. The belief needs to be based on information. This cannot be simply a whim or a view that's based on nothing or hearsay. It needs to be some kind of factual information before you as the employer, before you can give that direction. You need to have reasonable belief. So your belief about what and why you're giving the direction must be a belief available on the information that you have before them, and that information needs to be reasonably available. It's also necessary to maintain the employment of the employee. So the best way to describe this is to apply what lawyers call a but-for test. But for you doing this, directing different duties or a different work location, the employee would be made redundant. This is quite a high test, and it requires more than the JobKeeper direction being desirable or preferred, but necessary to avoid this. So again, I would strongly encourage you, talk to us about the detail as it applies to your particular business so that we can make sure you're staying on the right side of things when it comes to giving reasonable directions relative to the JobKeeper scheme. Do any other tests apply to giving a JobKeeper direction? Yes. There is a general overarching requirement that applies to directing somebody to stand down without pay, fully or partially, directing someone to perform different duties, and directing someone to work on different days. These directions do not apply to your staff if the JobKeeper direction is unreasonable in all of the circumstances, and I've just spent some time explaining what reasonable might look like. There are varying degrees. This is obviously a very broad test, first and foremost, and requires a consideration by you as the employer of anything that's relevant, including the personal circumstances of the employee concerned. So there are varying degrees to which an act might be reasonable on your part as an employer. There is no obligation on you as an employer to act in the most reasonable way available. What is important, however, is that a court or tribunal considering any direction does not consider the act itself to be unreasonable. So again, get advice, talk to us, we can walk you through that. What are the workplace flexibilities an employer can use by request and agreement? There are two. Now this is by request or agreement, not an agreement, this is not a JobKeeper directive. You can request your staff to perform duties on different days and at different times compared to their ordinary hours of work or days of work. You can request somebody to perform duties on different days and at different times compared to their ordinary hours, provided that you're requesting the employee to do so, you're not directing them. You're considering the employee. Okay, guys, as employees, you must consider that request from your employer and not unreasonably refuse it. The employer qualified for the JobKeeper scheme, so you have to be in the JobKeeper scheme. The performance of the duties is generally safe and specifically safe related to COVID-19. Performance of duties on those days is reasonably within the scope of your business operation as a business, and you become entitled for one or more JobKeeper payments. You can also direct an employee to take annual leave, provided that you've made the request. The employee must consider and not unreasonably refuse the request. You're eligible for JobKeeper. You maintain your employees maintain a balance of annual leave of no fewer than 2 weeks. And you become entitled to one or more JobKeeper payments for the period of the leave. Payment for the leave, be very clear about this, is based on the rate of pay that applied before the JobKeeper legislation operated. So double leave on half pay, which has also come in to the Fair Work Act, the employer and employee can agree to take double the paid annual leave at half pay. By way of example, an employer and employee can agree to 4 weeks leave being taken, but the employee only has 2 weeks annual leave deducted and is only paid for 2 weeks annual leave. You also have, very importantly, consultation obligations before you give any JobKeeper direction to an employee as an employer. So you must give your employee written notice of the intention to give the JobKeeper direction at least 3 days before the JobKeeper direction is given, or a lesser period if your employee agrees. You need to consult with your employee or a representative of theirs about the direction. Now, the notice might be in a prescribed form. It's not yet clear whether there will be a form prescribed by the government. That hasn't come out yet. So we'll give you further information about that. But you do have consultation obligations. Again, as I said, as I foreshadowed, devil's in the detail. So really important for you to get in touch with us, have a conversation. We can work out how this is going to apply and what your obligations are, what you need to do, and we can help you do those things, meet your obligations, letters, notifications, changes to contracts, whole range of different things. Okay, I realise we're at the half-hour mark and I'm just going to head into relevant questions. Please put your questions up if you've got them now. We've had a whole heap of questions that I've already listed here that I'm going to ask and answer. So we will continue on with this live stream until we finished those questions. Appreciate if people only have the half an hour. You can always come back and watch this question and answer section later if you wish. So the first question is, one of my employees is on a pension and usually earns much less than $1,500 a fortnight. Will getting JobKeeper affect their pension entitlements? The answer to that question is potentially yes, because they will have to report the JobKeeper income to Centrelink as part of their normal reporting process. So that is something that may happen. So can an employer get JobKeeper for employees on a visa? It depends on the visa is the answer to that question. Only permanent visas or subclass 444 New Zealand visas are eligible at this point in time. Talk to us if you have further details that you need in respect of that. Can my employee refuse to accept the JobKeeper payment? The answer to that is no. This is an arrangement between the ATO on behalf of the government and an eligible employer. So if you deem that, if you intend to apply for eligibility and for your employees to be covered, then that is between you and the government via the ATO. It is not something that an employee can refuse. Do I have to start paying JobKeeper right now? No. I hesitate to say it's business as usual because it sure as heck isn't business as usual for any of us. But it is business as usual in its broader sense until the scheme is actually up and running and you've been approved as an eligible business by the tax office. If you're not sure about how to adjust your payroll, then get in touch and we can absolutely help you with that. You may want to bring staff back and start paying them JobKeeper on the assumption that you're eligible. If you can't afford to do that, then we do understand that the Banking Association is going to be supportive of employers that may need some financial support between now and when the payments from the ATO would start coming through for the JobKeeper scheme, which won't be until the first week in May, and it will be paid monthly in arrears. Does JobKeeper also go towards leave payments? Yes, is the answer to that question. I have an employee on workers' compensation payments. Can they receive JobKeeper? It depends is the answer to that. If they're currently working for you or not is what it depends on. If they are working, even reduced hours, then yes. But if they are not working and therefore their income is being, or they're receiving payment through the workers' compensation scheme for which you pay premiums to your insurer, then the answer is no. I've had a question. I employed new staff after the 1st of March 2020. Can I claim JobKeeper for them? The answer to that is no. JobKeeper is only available for staff who are on your books as at the 1st of March 2020. My business is closed due to government restrictions. Can I bring back my staff and stand them down solely to pay them JobKeeper? The answer to that is absolutely yes. That's the point. It's one of the points of the JobKeeper scheme, but it's one of the main points. So the answer to that is yes. My employee also works part-time for another employer, maybe more than one other employer. Can we both claim and pay JobKeeper to the employee? The answer to that is no. Only one employer can claim JobKeeper for an employee. If both employers are eligible, then the employee should approach the employer they claim their tax-free threshold from. For the purposes of JobKeeper, they are considered to be the primary employer, the employer from whom you claim the tax-free threshold. If the primary employer is not eligible for JobKeeper or chooses not to participate, then as an employee, you can certainly inquire from another employer as to whether they're eligible and whether they might be going to intend to claim JobKeeper for you. If you're in this situation and not sure how to resolve it, please give us a call and we can help you navigate a sensible path. I have a staff member on parental leave. Are they an eligible staff member for JobKeeper? And when do I start paying them JobKeeper allowance if they're receiving the government's paid parental leave scheme payments? So the answer to that is, if you've got a staff member who's receiving payments from the government, then they're not eligible for JobKeeper. So if they're on the government's paid parental leave scheme or the partner scheme, they're not eligible for JobKeeper. If you as the employer, however, are paying them parental leave payments according to an enterprise agreement or some other industrial instrument, then they are eligible for JobKeeper. So please get in touch with us and talk with us about this. If you've got staff that you may be going to claim JobKeeper for who might have foreshadowed that they're going to be needing to take parental leave sometime in this next 6 months, talk to us and we can help you through what impact that will have. Okay, so we've already had the question, are staff on workers' compensation eligible for JobKeeper? If you are receiving workers' comp, you'll be eligible for JobKeeper if you are working, for example, on reduced hours, but it will generally not be eligible if you're not working. Okay, now this is a question that we had from yesterday, which my team have just reminded me of, and I've actually got in my list, which is great. If I offer a casual staff member on my payroll, who was on my payroll on the 1st of March 2020, a part-time position now, can they then be eligible for JobKeeper? Now, I need to make this really clear. To be eligible, a staff member had to have been a full-time or part-time employee or a casual employed on a regular and systematic basis for longer than 12 months as at the 1st of March 2020. So if they were not a casual employee employed on a regular and systematic basis for longer than 12 months as at the 1st of March 2020, then my reading of the legislation would be that they're not eligible, even if you tried to, or you had offered them a part-time position after the 1st of March. Be very, very careful in this space and in broadly in terms of demonstrating your eligibility for JobKeeper. There is a segment in the legislation that addresses schemes to make otherwise ineligible employees and employers eligible. That has potential significant repercussions. So the government will be including appropriate integrity rules to prevent employers from entering into artificial schemes to get inappropriate access to payments. There are very serious consequences, including large penalties and possible imprisonment for those who try illegally to get benefits under the scheme. So very legitimate question, of course, and no suggestion that somebody was trying to do the wrong thing, but talk to us. Anything around that, different changing to status of employees, etc., after the 1st of March, talk to us about what that might mean for you in terms of JobKeeper eligibility. Do I need to pay superannuation to stood down staff who I will pay JobKeeper to? No. Do I need to pay superannuation to current staff whose hours I will be changing? So if your intention, once you confirm JobKeeper eligibility, is to give a JobKeeper directive regarding changing somebody's hours, days of work, location, etc. Do I need to pay superannuation to current staff whose hours I'll be changing to reflect the new JobKeeper payment of $1,500? If so, is super paid on their original salary or on the $1,500 per fortnight JobKeeper allowance? Entitlement accruals continue at the original remuneration, even if you change your employee's hours to fit with the $1,500 per fortnight JobKeeper payment. This is also the case while employees are stood down. On information that we have currently available, super must be paid on contracted or directed hours, wages and salaries. So if hours are reduced, pay super on the amount that is paid. If normal pay is less than $1,500 a fortnight, you don't need to pay any extra super on the difference. If this changes, we'll let you know. It's also worth talking, of course, to your accountant, bookkeeper, or tax advisor. Lisa has asked the question, casuals. An employee is casual and misses out on JobKeeper by 11 days. I have stood her down. Can I re-employ her on a permanent part-time basis, stand her down, and then does she receive the JobKeeper payment? Thank you, Lisa. I don't think so. If we can take that one offline and give you more specific advice, that would be terrific. But if the staff member was not on your books in an eligible form on the 1st of March 2020, my likely answer to that is no. What if my staff member takes unpaid leave? For example, parental leave or unpaid personal carers leave. Say they've already they've already used all of their paid personal carers leave entitlements, for example. Do I still have to pay them the $1,500 JobKeeper payment? And if I do, does that leave period count for service when unpaid leave normally wouldn't? We get some really interesting questions and very important ones that I'm sure everybody wants to know about. So if your staff member is on leave of any sort, and you're eligible and they're eligible and you get JobKeeper for them, then they still get JobKeeper. Normal service accrual requirements apply. Note that if they're on paid annual leave at half pay, as agreed between employee and employer, they accrue service at the normal rate. No specific mention is made of unpaid leave in the legislation at this point in time. So we are presuming, and again, don't take this as gospel, but we are presuming that entitlements continue to accrue as normal, which means that in the case of unpaid leave, they would not accrue entitlements during periods of unpaid leave, even though they would still be getting the JobKeeper payment. Okay, so can I reduce my staff members' hours to match $1,500 a fortnight and ask them to take annual and or long service leave for the remainder of the hours? The answer to that is yes. Provided you meet the notice periods or get agreement, otherwise get agreement from your staff, then yes, you can. If I reduce my staff members' hours to match the JobKeeper allowance, can they get work elsewhere as well? And what if it's with a competitor of mine? So the answer to the first question, can they work elsewhere too if you reduce their hours to match the JobKeeper allowance? The answer to that is most absolutely. They are absolutely entitled to go and get work somewhere else if they're working less than full time with you. If you have an employment contract in place with your staff that has a conflict of interest clause that mentions that other work needs to be agreed before it's undertaken, or where you have confidentiality provisions in an employment contract that might make them working for a competitor a breach of that contract, then talk to us, because those contractual provisions need to be seriously considered. At the same time, however, we're in a situation where the landscape has shifted, and of course changes to the Fair Work Act supersede any things that are subsequently in modern awards, enterprise agreements and employment contracts. So talk to us about that one. So the answer to that is yes, they can get work somewhere else. What if it's with a competitor of mine? It depends. And this is one of those curly ones where we'd say get in touch with us and let's chew that one over. Can employers, I should say, receive both the JobKeeper payment and the supporting apprentices and trainees wage subsidy? So eligible small businesses can receive the 50% wage subsidy for apprentices and trainees in the supporting apprentices and trainees measures that were announced from the 1st of January to the 31st of March, and the JobKeeper payment as well. So where small businesses receive the JobKeeper payment, so once you get notification that you're eligible for that, you won't then be eligible to receive the apprentice and trainee wage subsidy from the 1st of April onwards. So you won't be able to double dip after the 1st of April, but if you are eligible for the 50% wage subsidy for apprentices and trainees from 1 January to 31 March, you can still get that and still be eligible to get the JobKeeper payment. It's just that the subsidy, wage subsidy, would stop from the 1st of April. And you would get JobKeeper. So it's now 10 o'clock. We've gone 15 minutes over time. Thank you for staying on the line and for interacting with us. If there aren't any other questions at this point, I might wrap things up for today. Of course, you can keep asking us questions in all of those various forms that we offered to you. Private message us on Facebook. You can call us, of course, anytime. Email us. You can contact us through our through our website, LinkedIn pages, a whole range of different means by which you can reach out to us. So please do that. This is going to be a significant thing for small to medium enterprises in particular, and not-for-profits to digest. Just to be clear, not-for-profit organisations will be eligible for JobKeeper. They will need to demonstrate a 15% reduction in turnover, just to make that clear and clarify that. That was an adjunct to the announcement that came out last week. But how this impacts you and how you can make sure you're meeting your obligations to let staff know once you know that you're eligible, or indeed let staff know that you intend to claim JobKeeper, which I would encourage you to do if you haven't done already. We can help you with all of those notice requirements, get the letters ready, talk to your staff with you, and literally walk beside you this entire way through this process. So please get in touch with us and we can certainly help you do that. So thank you so much again for joining us today. I've mentioned if you've got specific questions about your business or you need help, contact us anytime. Next Tuesday, of course, we won't be on air over the Easter period. We'll be taking a well-earned break over this time. Of course, if there's anything urgent that comes out in that time that impacts employers and employees, I do reserve the possibility of heading up and doing an emergency broadcast, but we'll certainly on Tuesday morning, we'll be hearing from Jessica, our consultant psychologist, with further strategies about managing our mental health during these unprecedented times. So please invite your colleagues and friends to that. Jess's previous 2 Tuesday sessions are up also on YouTube, LinkedIn and Facebook for your viewing pleasure. And she's got great strategies that she's sharing with us. So we really appreciate that and are delighted to be able to bring that to you. Next Tuesday, I will also do an update on anything that has transpired, that's transpired over the Easter period, any further information, clarification that we can give you. And look, finally, it's going to be a hard Easter for many of us, particularly with the inability to travel or visit family, as we might normally do. I would just encourage all of you who have the ability to do this in your household, please hug the people that you can. Wave cheerily at those that you can't from an appropriate distance, whether it's over this kind of medium or driving past in the car. It will be tough. But you know what? It's only through maintaining social distancing and home isolation that we're going to get through this with the minimum amount of sickness and impact on our most vulnerable, and the maximum of speed in terms of navigating out the other side. So stay safe, wash your hands repeatedly, stay at home, and I'll really look forward to seeing you next week. Take care. Thank you.